Okay, traders, let's talk about trends, determining the trend. When does the trend end? When is it a new trend? How do we actually define a trend? We have to answer all of these questions that seem to be a mystery for most, as it is used in the typical way, meaning through the type of analysis which has been done historically. And the trend analysis tools that you utilize when you open up your technical analysis trading platform, basically any one that you could possibly imagine to use, they're all the same because they've all been, following the same misinformation since the beginning of time when anyone was able to chart prices and put them on a computer and try and determine a trend. And so many have come up with various ideas. It's in the most simplistic, meaning just connect dots and draw a trend from one point to another and say, that's a trend. And if it goes below the line, the trend is broken. And if the line was broken, well, then that should be resistance. And when you think about this from a common sense approach, it's actually ridiculous and almost laughable that any of us, including myself, believed it at one point, that there can be lines projected into the future by connecting dots, and all of a sudden they tell us whether a trend has been violated or whether it's support and resistance. Another way is through moving average crossovers, which opens up a whole nother conversation that leads to confusion. Which moving averages? What parameters? When we say which, are they simple? Are they exponential? Are the exponential ones better because they're supposed to be faster? So if that crosses and the simple ones don't, did the trend actually change, or do we have to wait for the simple ones to cross? And then if the 5 MA crossed above the 20 MA, is that meaningful at all? And you've probably heard about the
Have you ever dreamed of winning a home
golden
that
cross and the death cross of the 50 MA crossing above or below the 200 MA? It's really ridiculous. And this is what we've all been inundated with as to how to determine trends and support and resistance, which we'll get into, but it goes beyond even those rather simplistic pieces of misinformation. You have regression channels and you have envelopes, and then there are the speed lines, and believe it or not, there's something called Andrew's pitchforks, and then the really esoteric ones where you have Gann lines and you can get into the square of 9. And do any of them actually hold true? And do any of them become any more meaningful than another? And when you start looking at all of this, of course you look like this fella right here that has no idea anymore what is the truth, but he will continue to search it out because that's what we do, in hopes of finding someone that knows the truth. And you might be thinking that someone knows maybe the right way to use any of these, but in reality, you have found the truth here at Master Trader. And I'll tell you, it's to get rid of all of it from that perspective and stop using it, and the light bulb moments will begin to go on. We looked at this in the beginning section, but just to review it again, it's a maze of confusion, as you can see here, as it goes through each of the mazes, trying to find its way in determining which line you should actually connect the dots to, and does it actually break the trend when it violates that? We need to set up clear-cut, black and white rules as to how to determine the trend, when the trend breaks. If the trend breaks, what happens then? What if it resumes the trend? And we have to understand this in multiple time frames, and that's where the power of this course comes in. When you understand how to put this all together, you will be amazed at how you can determine the direction of prices in multiple time frames without any of the esoteric hocus pocus indicator-based methodology. And I cannot promise you that you're going to be right every time, because there are whipsaws that happen, but I'll show you how to take advantage of them, even if you get caught in one of them, and it's going to happen at some point. But at least you will have objective information to be able to change and potentially profit from what has happened. And that is extremely powerful, because we have all been in situations where we said, if I had only flipped in the other direction. But how do you possibly do that without a method that empowers you to be able to recognize that it's just not going to be a whipsaw of a whipsaw? And is it a reasonable and powerful piece of information that we can take advantage of? Let's continue. Break of a trend line. Truth, reality. CNBC, as I said, you have people showing you this information almost every single day. And here you have a break of a trend line right here where it violates the trend. But did it violate the trend? We have to define what a trend is before we can say it actually violated. Just because there's a line connecting dots here, is that really a trend break because that happened? And now we see prices are moving back up again. So we need to understand this, as I said, in a very black and white way, so that we absolutely know what is and what isn't. And when we're done here, I don't think you'll be drawing any more trend lines, because it's just not necessary. Just to mention about these false beliefs. When you learn a particular strategy, a method, and you are learning one here, it is going to create beliefs. So if your beliefs are based on faulty concepts, like what I've explained about trend lines and moving average crossovers, you're operating from thinking that you have valid information, but in reality, you don't. And of course, that leads to making faulty decisions, which leads to losing money. So we have to get beyond all this, and why I'm telling you that we had to explain to you why not. Define a trend. Well, it's really rather simple. An uptrend is defined by higher highs and higher lows. And we don't need any indicators or magical tools to determine that. We simply look at the highs and the lows. Now, we're going to define what's a high and what's a low, because if we don't do that, it is subjective. So we have to define each one of these pieces. And once we do that, we know clearly, is it in an uptrend or not? Has the trend changes? So we have to define that too. What would actually violate the trend if it isn't a trend line? In a downtrend, lower highs and lower lows. Sideways trend, we're going to require a minimum of a third retest to call it a sideways trend. Just plain old common sense. Right? When is it over? It's easy. When there's a downward trend break of the uptrend, and you can see the way that this has been drawn, very clear. It has violated this low prior to the higher high. And we'll look at this a little further, but that is what we're going to be viewing, is that if it's making higher highs and higher lows, we just continue to monitor that. And when it no longer meets the definition, we know that there's been a trend break. An upward trend break, making lower highs and lower lows. And when it no longer meets that definition, it's no longer in a downtrend, and we've had an upward trend break. Right? Breakout, sideways trend, right? 3 or more. And when it breaks out, clearly that is a breakout, and that allows us to buy pullbacks and breakdowns, 3 or more, and then a breakdown. That trend is then over. Here are our guidelines. An uptrend is defined, as I said, by higher highs and higher lows. And I'm saying pivot highs and pivot lows, which is required to define what that actually is. But we'll get to that. Within that uptrend, that pivot low prior to the higher high is what we're going to call major support. In other words, that low that occurred prior to prices making a higher high is major support. And we continue to follow that as long as the trend is moving up. Every time prices make a higher high that was preceded by a prior swing low, a pivot low, that becomes new major support. And we continue that process until it ends, meaning that prices traded below that major support level, and that ends the uptrend. Very simple. A downtrend is defined as lower pivot lows and lower pivot highs. There's a downtrend. The pivot high prior to that lower low is major resistance. So if prices push up above that major resistance reference point as defined, the downtrend is over. It no longer meets the definition of a downtrend because it's no longer making lower highs and lower lows. It is traded above the prior pivot high, which we have defined as major resistance. This doesn't mean that it's now in an uptrend when it's violated that prior pivot high. We need to go deeper into this analysis. Let's do that. First, let's define what a pivot is. Once we've done that, we're getting this to the point where it's just black and white. Now, a pivot high, it's a reference point. There's been a shift between what we call the forces of supply and demand, sellers and buyers. So that pivot high is going to begin with a higher low bar on both sides of the pivot. Here is our high point. So it begins, right, with lower highs. And then we're going to need a minimum of 3. And once we have 3 to the left and 3 to the right, we're then going to know that we have a pivot high of significance. And the same for a pivot low. 1 is not enough. 2, we're getting there, but we want 3. And once we have 3 to the left and to the right, we'll then define that as being a pivot low. And what we're looking for is a trend of these pivot highs and these pivot lows. And that's going to clearly tell us that there's a trend and if there's been a violation of that trend. And we're moving toward analysis that is black and white. It's one of the few things that has no gray area whatsoever based on our method. Every pivot high is marked here, and each one of them has 3 or more lower highs to the left and the right. And every pivot low has 3 or more higher lows to the left and right of that pivot. And as you can see, we now get a trend of these pivots. Pivot low, pivot high, pivot low, pivot high, and we can just visualize them. And if you can count the 3 on either side, and of course you can, here I'm showing you some software that actually marked it there. And now we're following the trend. When a high is established, we recognize that. A low, we recognize. High, we recognize. Pivot low, we recognize. And as you can see here, I'm just going to kind of connect the dots, so to speak. Right? At some points, it does get whippy, but you see the highs and lows, and we have a trend. And it continues to trend. And as we see that this has happened here, and we look at this, and we think about the definition of what we called major support, was there a point in time where it violated major support? There are deep retracements along the way, for sure, which puts the trend in question, but did it actually violate any area of major support? I'll leave that with you. The next question, when does the trend end, and when is it a new trend? So we touched on this in the prior slide, where we looked at the pivot highs and the pivot lows. So it's simple. The trend ends when it no longer meets the definition of such. And that happens when major support in an uptrend, which we've defined as the pivot low prior to a higher high, is violated, or a major resistance in a downtrend is violated. So a break of major support or major resistance is going to violate a trend line every time. And this assumes that the person drawing the trend line is going to be drawing that, connecting the highs and lows as we've defined or call them. That's what most will do, is that they'll connect those swing lows, and then that becomes subjective because the person that's choosing those lows, has he defined what a low is? Or is he just viewing a low that came down and he's making the choice as to what a low is? And then the next person looking at it decides to connect different dots, which leads to mass confusion, that maze of confusion that I talked about. We are defining what a pivot low is, what a pivot high is it making higher highs and higher lows? And based on that definition, if it violates major support, it will violate that trend line every single time, which makes trend line use unnecessary. Because if you recognize major support as defined, the trend is violated. You don't need to draw lines. Now we have a rule that says if it violates 2 prior pivot lows in one move, that's a strong indication of a trend change. In other words, if we had this low and this low violated in one move, we're going to say that the trend is now moved down even before it has established lower highs and lower lows. And for me, that is just a matter of common sense to be saying that the trend here, we should look at it as being sideways because it violated this. Now, if something came down that far to violate that, I'm going to be looking to short a retracement. And we're going to get into this, and I'll just mention here to plant the thought that the type of retracement, the initial one, is not going to be the one that we're going to look to short. It's going to be one that forms what we call an M top. Let's move on from here. Just to define when the trend has actually changed. Now, it changes, we need lower high 1 to form, lower low 2. It's pushed down below lower low 1. And then once this becomes a pivot, lower high 2, it's in a downtrend. So it's violated the trend. So at this point, we could say it's sideways. And then at this point, we have a new downtrend established. Does that mean we need to wait for this before we could sell short after a trend break? No. We'll get into that. When is the uptrend violated? Well, you've already got that figured out. When it violates major resistance, higher high 1, higher low 1, higher high 2, higher low 2. We now have an uptrend, and there has been a break of major resistance. Once we get a break of major resistance, we could then be considering to buy the first pullback. But we shall get to that. Let's continue. Trend change. And so here we have lower highs and lower lows. So technically, the uptrend is no longer one because lower high 1 becomes a pivot, and the downtrend is no longer one when lower high 1 becomes that pivot. So here we have a series of lower highs, lower lows, and we say that this is a downtrend. However, it has not violated major support yet. And the same with the way this is drawn here. We have major resistance, and we have higher highs and higher lows, which would be defined as an uptrend, higher highs and higher lows, but it hasn't traded above major resistance yet. So when we start talking about price voids and climactic moves, there will be times where we're going to get this type of scenario of higher highs and higher lows approaching major resistance. And we're going to consider that as a possible selling short point. We've got more work to do before we could go there. And again, I'm planting seeds as to the type of information that we're going to be getting into. So the trend has not been violated here, where it's violated major support or major resistance. So these types of corrections are still trending in the direction of the major trend. And so what we have here is to say that this is the major trend, here's major resistance, and this beginning uptrend here is just trending up into that major resistance area where there's going to be sellers and the potential for prices to reverse back to the downside again. And this is going to lead us eventually into understanding multiple time frames as well. As I said, we're going to be talking about this in multiple time frames, retracements, and tradable patterns. I think you're starting to get this at this point and understanding the subjectivity that you've been inundated with by the majorities as well as the media, and how to understand in a very simple way what is an uptrend, a downtrend, and when there's been a change in trend. Let's look at a few examples. So trend breaks can happen in different ways, or reasons. The market could have a correction and a particular stock violates its trend, or the sector has a correction and violates its trend. Now, did it not go higher at the time? Meaning, what happened after the trend break? Relative weakness to the broader markets could be a reason for it breaking the trend. In other words, we don't second guess this. It is what it is. Once it's in an uptrend and we've got a higher low and a higher high, we mark it off as major resistance, and there's been a trend break. It's black and white. Now, in this case, the trend resumed. There was some type of a shakeout for whatever reason. This is a market correction or the sector. It happens. When I say just move on, reevaluate and say, is this a new opportunity now that that's happened? And look at it objectively. Even if you gave up a position, let's assume that you were long on the way up here and you sold because of a trend break, a valid trend break, and it resumed. Well, reevaluate. Maybe you should get back in again. This is going to happen at times. Trend was never broken here on these trend line breaks. Right? That happened here. Here's our major support. It violates the line. No big deal. Just coming into a little area of support here. Now, at this point, it made a lower high. So this does not meet our definition of major support here. So this lower high, lower low, I'm going to show you examples where it's actually an excellent buying opportunity. This retracement here, 90% pullback. We'll talk about this in retracements, but it's certainly putting the trend in question. So here is our major support area, and this is where we know buyers are going to begin to step up. Here's that bottoming tail bar, but the way this came down, it's certainly making it questionable as to whether this can move back up to these highs again, not without some type of a retest. And retest patterns are going to be something that we're going to focus on an awful lot. So to be a pivot, as mentioned, it requires 3 bars to the left and the right of the pivot bar. So as we look at this, view it, visualize where the pivot highs and pivot lows are, and look at that and say, well, where did it actually violate the trend on the way up? Take a look. And now I've marked those pivot highs and pivot lows. So now we're objectively looking at a trend of higher highs and higher lows, the pivots as we've defined them. Did it violate the trend at some point? Clearly it did not. It was still in an uptrend. Was it questionable at some point? Absolutely was. Earlier I touched on the size of, or ranges of bars telling us about certainty and uncertainty. And we could see here that a lot of uncertainty came into this particular stock. And look at the depth of retracement here. It put the trend in question, no doubt. But we have an objective method of saying, did it actually violate the trend? And it did not. It certainly put it in question, but it didn't violate the trend. And if you were using the typical trend analysis type of tools and connecting the dots, you would have said the trend was broken. It was not. If you connected here, you would say the trend was broken. It was not. The depth of retracement here put the trend in question, and then it resumed the trend. And notice bottoming tails. We're going to be talking about bottoming tails a lot, and bars that are ignored, and how to analyze repairing the damage. There's a lot of education coming, but you're starting to get some insights as to how we objectively monitor various concepts. In this case, trends, what's pivot highs, what are pivot lows, and we're doing this in a way that is just black and white. There's no gray area here. These stars, we're going to notice as we go down to the smaller time frame in the exact same areas. So when we look at pivot highs and pivot lows and trends, we're doing this in multiple time frames, and we're going to spend a lot of time talking about multiple time frames because it's such an important piece of information. So you can see the first star here and this pullback, and you could look at these individual bars that formed as the bottom began to occur. And then there was a retracement on the yellow star as it pulled back and prices retraced back up. And then as prices moved up again, right, we're looking if there was a trend break. So we start our trend analysis on the macro time frame. Is it in an uptrend? Is it in a downtrend? Has the trend been violated? And if not, our bias is that. And what makes this so powerful is that as prices are correcting in the micro time frame, we're preparing for those buy setups to form because the macro time frame is still in an uptrend. So micro time frames can be trending lower. They may have violated the trend, but when the macro time frame is still in an uptrend, and then prices begin to form bullish patterns in the micro time frame, we are looking to participate at the appropriate time when we get, ideally, a retest pattern. And we'll look at individual candles to form, and this will get us in relatively close to the turning point. Turning points are going to be another concept that we're going to talk about a lot, and how they form. So the concept of using a macro time frame trend and combining that with a micro time frame trend is extremely powerful to form our bias. And when the micro time frame begins to turn, which could have had a trend line break or a trend break, and when to get on board at the appropriate time. Let's move on to our next section.